Get ready for a deep dive into the world of economics. We're about to explore the latest GDP figures and their implications. The U.S. economy is on a roller coaster ride, and the numbers are in. In the second quarter of 2025, the U.S. economy experienced a growth spurt, with real GDP increasing by a robust 3.8%. But here's where it gets controversial. This growth was primarily driven by a decrease in imports and an increase in consumer spending. Let's break it down. The decrease in imports, which are subtracted from GDP calculations, played a significant role in boosting the overall GDP. This is an interesting twist, as it suggests that the economy might be benefiting from reduced reliance on foreign goods. However, this was only part of the story. The real hero of this quarter's GDP growth was consumer spending. Americans opened their wallets, and this increase in spending contributed significantly to the overall economic growth. But this growth wasn't without its challenges. Investment and exports took a hit, partially offsetting the gains from consumer spending and import decreases. From an industry perspective, the growth was broad-based. Private goods-producing industries saw a substantial 10.2% increase in real value added, while private services-producing industries grew at a more modest but still impressive 3.5%. However, the government sector experienced a decrease of 3.2% in real value added, which is a point that might spark some debate among economists and policymakers. The price index for gross domestic purchases also saw an increase of 2.0% in the second quarter, which is a key indicator of inflation. This increase was primarily driven by an upward revision in consumer spending, which is a critical factor in the overall economic picture. Real gross domestic income, GDI, also increased by 3.8%, which is a positive sign for the overall health of the economy. The average of real GDP and real GDI increased by 3.8%, indicating a strong and balanced growth trajectory. Now let's talk about corporate profits. Profits from current production increased by $6.8 billion in the second quarter, but this is a downward revision of $58.7 billion from the previous estimate. This is a point that might raise some eyebrows and lead to discussions about the sustainability of corporate profits in the long run. The annual update of the National Economic Accounts provides a comprehensive look at the economy's performance over the past few years. The updated estimates show that real GDP increased at an average annual rate of 2.4% from 2019 to 2024, which is in line with previous publications. However, the period of economic contraction from late 2019 to mid-2020 saw a significant decrease in real GDP, which was revised upwards by 0.1 percentage point. For the first quarter of 2025, real GDP is now estimated to have decreased by 0.6%. A downward revision of 0.1 percentage point. This decrease was primarily driven by downward revisions in investment, government spending, and exports, which were partially offset by an upward revision in consumer spending. The price index for gross domestic purchases also saw a downward revision of 0.3 percentage point for the first quarter of 2025. This indicates that inflation might not be as high as previously estimated, which is a positive development for consumers and businesses alike. Real GDI is now estimated to have increased by 1.0% in the first quarter, which is a significant upward revision from the previously published estimate of 0.2%. This revision was primarily driven by updated data on corporate profits and compensation, which are key components of GDI. The average of real GDP and real GDI is now estimated to have increased by 0.2% in the first quarter, which is also an upward revision from the previously published estimate of a 0.1% decrease. This indicates a more positive outlook for the economy's overall performance. Profits from current production are now estimated to have decreased by $47.8 billion in the first quarter, which is an upward revision of $42.8 billion. This revision is a result of updated data and may lead to discussions about the accuracy of profit estimates and their impact on the overall economy. So what does all this mean for the future? The next GDP release, scheduled for October 30th, 2025, will provide further insights into the economy's performance in the third quarter of 2025. Will the growth momentum continue, or will we see a shift in the economic landscape? Only time will tell. And this is the part most people miss. The economy is a complex web of interconnected factors, and these GDP figures are just one piece of the puzzle. It's essential to consider other economic indicators and global trends to get a comprehensive understanding of where the economy is headed. So, what do you think? Are you optimistic about the economy's future? Or do you see potential challenges on the horizon? Share your thoughts and opinions in the comments below. Let's spark a discussion and explore the diverse perspectives on the economy's trajectory.